Hi traders, Luke Suddards here, back with another episode of Technical Tuesdays. Again, the show is pre-recorded, it'll be live on TradingView. I'll be live there, should I rather say, to attend to any of your questions. So without further ado, let's get going. Got the dollar up on the charts here, DXY. We've broken out of this range consolidation. We're charging ahead towards 100. That's a key psychological level. The RSI, the 9-period RSI, is snuck into overbought territory. It's not as high as it was in terms of readings as that high there back in March, early March. And as a result of that, we could actually see potentially momentum's obviously weak on this move up, and that could have implications for the strength of this bull move. On the downside, I'd be looking towards this 99 level as support. If we were to see a pullback, the former range resistance will probably now act as range support. Let's move on to Euro USD. We can see it's just hovering below its lower trend line of the descending channel. That initial pop higher we saw on late Sunday evening from Macron's result has now been faded, and we are closely approaching or eyeing up this 108 former low. On the upside, I'd want to see price push through 109 and get closer towards this 21 days exponential moving average around the 110 zone. Moving on to GBP USD, we obviously saw some employment figures out today from the pound cable. We're probing this 130 level. It's a key psychological level. We break below there. The swing low that we saw back in mid-March. On the upside, 131 and above there, we've obviously got to overcome the 21-day exponential moving average as well as a 23.6% Fibonacci level. I've also drawn in this, it used to be former support, but now it's going to act as resistance at around just shy of 132. It's at 131.8. Let's go on to Euro GBP. Seeing a bit of a range here, Euro GBP around 838 and 0.83. We're right around this 50-day simple moving average at the moment. With this ECB meeting on Thursday, I think the risks going into it are actually to the hawkish side because the market sort of expects them to stand pat and not do anything, given that we've got, French election uncertainty and we don't have enough economic data to assess the damage from the Ukrainian war. And then obviously on the upside, if we were to break through that 50-day simple moving average, we've got 0.84 above. And that is important for bulls to clear out if we were to have another push at that 200-day simple moving average. And then we've obviously got the low down at 0.82, but we'd have to really see sentiment turn in the euro to push it that low. I think for now we're going to be range bound between either these levels here or higher up between these two bounds. Let's move on to US dollar JPY. Again, it's continuing its surge higher. It really rose yesterday on the back of those US yields increasing. Again, we're not seeing as high a momentum really on the RSI as we did on that high. Is the buy momentum starting to wane a bit here? We'll have to see. There is a bit of distance between the moving averages. It's quite extended. On the upside, 130 seems to be the new target that everybody's talking about. If we get there, that would be quite something. About another 500 pips, 450 pips from here. And on the downside, I'd be looking towards this 122, 123 area here. A bit of resistance, would now act as support potentially. Let's look at the NASI 100. We've got this level here. It's below its 50-day simple moving average. We're around here now at around 13.8. I think the next level of support around 13.5. Let's just drag this down a bit more. 13.7 there, but actually we get 13.750. We got a bit of support there. If we break through that, 13.5 is obviously the next area, and then below there we start going towards around number 13k. I actually thought price was going to stay in this little range here, but the US yield rising yesterday was too much for the Nasdaq to handle. Down 2.3 percentage points, 2.3%, and the RSI has still got a bit of room to run before it can be considered oversold. So yeah, watch out, equity traders. Let's go to commodity space. Gold still remains resilient, broke out of sort of this little range here at 1940, and now we're up against that 38.2 Fibonacci level at 1960. We're above the 50-day simple moving average, still pointing upwards. That's good news for the bulls. The RSI, we're getting quite close to this level here at around like 62.80, which has capped price peaks in the past. So we'll have to see what happens there. If price continues to push high and the RSI gets closer to that. And then we've obviously got the 50% Fibonacci level above there at 1982. So some big key resistance levels for gold buyers to clear. On the downside, I would think that, this area around here, the 1940 and the 50-day simple moving average will provide some support. So if we broke below there or broke below 19 as well, that wouldn't be good news for bulls. Let's look at spot Brent here. Brent crude, obviously intraday we just dropped slightly lower than that $100 mark. We've bounced now off it. That's a key level of support for the bulls. If we break below there, in my opinion, we're going to start seeing a shorter rallies approach. We might already be seeing that as we can see this. I've drawn in this trend line a series of lower highs, and we got this flat-sided support here. That's actually a flat-sided descending triangle, which usually tends to break to the downside. So we'll have to see what happens here. The RSI is in no man's land, so we can't really see what's going on there. Let's take a quick read of interest rate pricing. We got the May contract pricing in 2 now, so 50 basis points, 225 basis point hike, so 50 basis point hike. We've got basically just over 75 basis points priced in for June. July, we've got almost 4.5. September, 6.2. And December, just shy of 9 hikes priced by the end of the year. So yeah, very interesting times for rate markets. We'll see if today's CPI number can do anything to this, and the dollar and the assets mostly affected by an inflation reading. Thanks for joining today's episode of Technical Tuesdays. I hope you've enjoyed it. And I'll see you next week for another episode.